Any good financial advisor will tell you, invest for the long term. But can you, or anyone really, ignore the short term? When something is noisy, it's hard not to be distracted, and that's certainly true with our money. We easily become emotionally triggered when stock or bond markets are volatile, which is a fancy way of saying go down. But here's the thing. Feelings of nervousness, anxiety, or even fear, these are absolutely normal human reactions. They are part of our evolutionary journey to today, with a couple of glitches along the way. Let us explain. As we've evolved as a species over the last 300,000 years, our brains have developed a fine-tuned mechanism that alerts us to danger. That alert keeps us alive. Our fight or flight response is triggered automatically when the brain senses a threat. And this has held us in good stead over the millennia. Spotting a physical danger, like a lion staring right at you, can pin you to the spot in abject fear. This finely tuned fear response has been instrumental in the survival of our species. But, and this is an important but, it doesn't come with an off switch. Fight or flight is part of who we are. That was true on the savannah, and yes, it's also true in modern living. That includes how we process and make hard decisions about capital markets. Our emotional attachment to our hard-earned money is powerful. When we take risk, even just a little, we can feel it. It's a physical sensation in addition to an emotional one. A lion in the wild, red lines on a screen. They couldn't sound more different, but both can cause fear. Indeed, disembodied threats are no less real than the ones that roar. What's the natural response to a falling market? For many, it's similar to seeing the lion. In both cases, we are wired to get away from the threat as quickly as possible. Yet, here's the rub. In the case of the lion, that makes perfect sense. In the case of long-term investment, it may turn out to be an overreaction. Our emotions around money aren't limited to just investing. With saving, borrowing, spending, earning, and giving, all of these areas of money life trigger their own unique brain chemistry. That's right, our saving brain is a bit different from our investing or charitable brains. So when we say your money fears and anxieties are all in your head, that doesn't mean it's made up or illegitimate. Not at all. It's literally true. Let's take a look at the four main brain chemicals or neurotransmitters at play in the psychology of money. The first is cortisol. This chemical makes sure that we place our attention and focus in the right place. When we sense danger or threat, our cortisol levels rise. Another is dopamine, which is all about reward and motivation. When we achieve something great, dopamine is released and makes us feel really good. Next, oxytocin, which is released when we experience trust or empathy. Hug someone you love, and your brain will flood with oxytocin. And finally, there are endorphins, released when you experience pleasure or satisfaction. For those who exercise and enjoy the so-called runner's high, that's your endorphins talking. So, how do these apply to our money life? Well, let's look at spending. When we're shopping for ourselves, engaging in a bit of retail therapy, we're likely experiencing big boosts of dopamine and endorphins. With investing, on the other hand, we can see our cortisol levels fluctuate dramatically. If markets are falling, cortisol levels will likely be higher. If markets are rising, then our dopamine levels will rise. The example of charitable giving is fascinating. If you want to experience a drop in cortisol levels, but a boost in the other three, then look no further than being generous. Whether it be of your time, money, or simply a random act of kindness, giving is great for those on the receiving end. but it's also good for us too. So you just took a quick and colourful tour of what's happening inside your brain, but why does it matter? Well, it shows us that the feelings we experience when it comes to money are just part of who we are. Reluctance, excitement, optimism, fear, panic. These are all perfectly normal feelings. Not irrational, normal. There is no right or wrong mix in those test tubes. Each level is unique to you, and that's the beauty of being human. With our money decisions, and with the emotional roller coaster of investing in particular, it can be comfortable to know that this is just who we are. With that knowledge, we're a bit better able to pause and reflect, to gain perspective on what triggers us, even to adapt. And who knows, the lion you think is hiding in the long grass may actually turn out to be a harmless kitten.